You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know where volatility is? Well, let's go find it together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hopefully, many of you are enjoying all the content that has been hitting you this week. Tons of stuff coming at you throughout the week, including a great pro Q&A with Mr. Tony Saliba. Check that out if you haven't done so already. If you missed it, if you're not part of the pro club, you know where to go to learn more. TheOptionsInsider.com/pro is the place to go. There's still time. If you want to get in there, you can join us a little bit later today in the secret club for options oddities. Spoiler alert, should be an odd one this week, as it is every week there on Options Oddities. So join us for a whole bunch of fun after this show for those of you in the secret club. Of course, however you listen live after the fact, a legion of people on demand on platforms, many and varied out there. If you like what you hear, rate and review. It does help new folks continue to discover the show. And as we've seen from all of our numbers of late, there are a lot of new people out there discovering the world of options and volatility. And if you have a question, send it our way. We'll see. If it's intriguing, perhaps it'll make it onto the show. Let's see what's made it onto the show with me today. Let's go on out. I think we have a double header, a twofer from the Northeastern volatility mecca. Let's go out first to the dark and stormy shores of Maine, to the imposing, perhaps dare I say it, even intimidating GIOVINAZZI family compound, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI. Mr. G, welcome back to the program. How go things on the shores of Maine? They're so good you have muted yourself. Rousing way to begin, sir.
Oh my! You know what? I've been doing well lately. And I just realized this is probably my 11th year on the show, if you can believe that.
An inauspicious beginning to your 11th year, sir.
And I'm just as bad at it as when I started 11 years ago. Although I am very well, but I am quite happy to be co-hosting. Like, Matt and I go back so far. He was an FNG in my pit like almost 30 years ago. If the listeners can believe it, Of course, Matt has gone on to do great things with ORATs and things like that. But anyway, I'll leave it at that. But we also have, I think he has a New Hampshire compound, and I have a Maine compound. So this is the battle of the dueling compounds in New England.
Yes, adjacent compoundage, because we go a little bit farther afield from Maine, but not too far, to the very short coastline of New Hampshire. They have one. You got to look for it, but they do have one, where we are joined in the MyX hot seat this week by the Oracle of New Hampshire himself, Mr. Matt Amberson, from ORATs, also from back in the day with Mr. Rock Lobster in the pits over there on the Seaboat. Just shows how incestuous the options world is at the end of the day. Everybody knows each other, even if they're scattered to the four corners of the earth, or in this case, to the far northeastern quadrant of these here United States. Mr. Matt, welcome back to Volatility Views, sir.
Yes, I used to draw pictures on his jacket, on Andrew's jacket.
Oh, you were that guy. You were the guy who drew the pictures.
Yeah.
There was always one of you in the crowd.
And he was so busy that, he often didn't feel it, but it was those are some good memories from back then, Mark.
The hot thing in the SPX when I was out there, people wouldn't draw. They weren't that artistic. They would go to the covers of, I don't know, let's say a GQ or some other, or maybe Muscle and Fitness, cut out some guy posing in like scantily clad, in a bathing suit. And they would cut that out, and they would work to strategically and diligently hang it on your back without you knowing. And that was a test of skill, if you can put it on someone without, and then people behind them inevitably would start trying to crack that same pose, and it would be a good time for everyone, except for the guy who had it hanging on him, who felt quite shamed. So yes, these are the quality jokes and skullduggery that you missed out there on the trade. If you lament missing the trading pits, listeners, that's what you missed. All that kind of fun. As we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's dance. Let it begin. It is time to review some volatility. And we had a little bit more earlier in the session than we do now. Coming into the start of the show, we are still seeing that sell-off out there, mitigating a little bit across the board. Kind of depends where you're living, where you're hanging your hat out there today, what kind of day you're having. The Dow bucking the trend, up a wee bit, up nearly 0.2%. The S&P in the other direction, off nearly 0.2%. And the NASDAQ off looks like about 0.85%. It was off a full percent at one point. So most of the sell-off looks like has bounced off the lows of the session. Of course, a lot of this weighing, especially the NASDAQ, of course, weighing on some of the earnings. We're seeing, of course, Snap being the first of the big ad revenue-oriented companies to point a finger at Apple's new policies and saying, oh, no, you've heard our earnings. So that's going to be the new thing to blame for this cycle. And so people are expecting more of that, maybe out of the Facebooks and Googles of the world. So a little bit of a sell-off, and the tech-heavy NASDAQ coming into today. Like I said, we did see more vol on the screen. We had both spikes and VIX in a 16 handle not too long ago. Coming at the start of the show now, both of those have retreated back into the 15 handle. Spikes at about a 15.75. That's still up from last week, up, but not quite half a point, about 0.4 of a point. So not a huge move, and certainly not as big as it was earlier in the session. VIX Cash, same deal, was up earlier today. Now coming into today's show, it is at about a 15.5. When we kicked off the show, puts it down actually 0.75 of a point from where it was at this time last week. VVIX, the vol, ticking back up a little bit this week. Back up to about a 110. Puts it up a little over 3, about 3.5 points. So we were wondering if it was going to maybe break the triple digits level the other way, get back into a 90 handle. I haven't seen one of those in a while, but not to come to pass, at least. And it hasn't happened as of yet, but we shall see. The day is still young. Let's go around the horn here. Let's start with Mr. Matt. We're going to get to all the fun. You know why Matt's joining us, listeners. It's the start of earnings season, so we're going to get to all of that in a second. We have a lot to sink our teeth into there, including some perhaps surprises in store for us. But before we get there, Mr. Matt, what is lighting up your tape from a broad volatility perspective this week, sir?
You know me, Mark, I always like to look at how the Robinhood effect's doing, and it's still there, but not as strong as it was back in June. It really retreated, meaning the 5 delta versus the 75 delta. I just watched that ratio. That's a little I have to do here in New Hampshire. And it dipped below 1, and now it's above 1 again. So that's one skew I've been looking at. And then just the put-call skew, we call it the slope, of the SPY finally came off. It was pinned at the top at a 100 percentile, but now it's down, came below the 50 percentile and is right about the 40 percentile for the year. So that skew has come off, which is interesting. I think I said on the pro version when we were talking about earnings that it feels like the earnings they're just going to rally it for the earnings, and it looks like they're going to do that. Today's a little bit of an exception, but there not that much earnings today, tomorrow, but next week there's going to be a ton. It just feels like they want to rally this market. What a perma bull I am, but it feels like this market wants to go up. But I think when earnings is over, there's going to be a bit of a reckoning, Mark. That's what I'm saying.
Interesting. The reckoning is upon us. I don't call him the Oracle of New Hampshire lightly, listeners. He has called a few turns in the volatility regimes over the years. So intriguing stuff afoot. Let's get out there to the dark and stormy shores. So we're just going a few miles to the east and maybe a little bit north there to the GIOVINAZZI compound. Mr. Rock Lobster, do you concur with that? And what is lighting up your tape? We were heading towards the zone of the monk, then we kind of bounced out of it today, but now it's like maybe we're heading back in that direction. So what's lighting up your tape as vol is kind of dithering back and forth, sir?
I agree with Matt 100%. Right? We saw like 14 handle today. Powell came out with some strong taper stuff. I believe I don't know if it was, obviously there was some kind of remarks. Maybe he wanted to cover the last of his short SPY ES futures that he had today before they blackballed him from trading.
Are you saying he's like the rest of the Fed, just slinging stocks left and right? Is that what you're accusing the beloved Fed chairperson of?
Or just a member of Congress? I think,
Yeah, pretty much any of them. They're just gunslinging all day.
So, yeah, I agree with Matt. All the because we have sheets we provide our clients with stuff, and all of our skew indicators have dropped like a ton. They were blistering the top of, and they've been like that for some time, and they've come off substantially. Like Matt said already, cut in half basically, where they are relative to the standard deviation range. So that's how VIX gets lower. That's how you get lower numbers. How do you get into the zone of the monk? People start selling puts again, and people, I think will be funny to see is, and I agree with Matt here on upside, like how upside, if it starts to catch a bid again. And I'm interested to see if Matt, because I really don't do any upside work at all. I think Matt does. He's got a lot more, he's got a lot more volatility tools under his belt. But it would be interesting to see if people are coming for calls again. I personally like the trade I like now is I just want to buy a ton of VXX puts. I'm going to buy upside calls, and I will hedge with just some upside VXX, just because I don't think this curve is going to hold up. The vol's too low. Nobody cares about anything. Stocks just keep going up. I mean, Intel is down 10%. Nobody gives a damn. And the reason why, because everybody's expecting AMD and NVIDIA to do great. So, you look at this stuff, and next week is big, I think, as far as broad market goes. We could see, I believe we'll see drastically different VIX. We could see like the 13 handle or 22, 23 again on Friday after all the biggies report. So, because if it kind of sucks, that's going to drag the market down. But if it's kind of in line, I think it'll be a vol killer. So I think there's more trade around VXX, to be honest, because it's a good part of the cycle. It's relatively weighted to November right now, or UVXY. So again, Like the more sensitive those products are, like the more I prefer to load them when they are more poised to move on one future instead of two. If you're an option buyer, if you're an option seller, you're waiting for slightly different things in the cycle. But that's what we've got. And yeah, I'm glad Matt's seeing the same thing I do, because now I feel better. I feel better that I'm just not crazy and that all of a sudden they took the bid out of all this stuff. But I think we're going to end up on the day today, to be honest, which is, after Powell's comments, if we can rally on that, start going to buy the 460s in December or something, the 470s or 480s or something, because what the heck? It's going up, it's going up. Don't fight it.
Don't fight it, indeed. Well, both of you kind of referenced skew. I know, Matt, you've been watching your Robinhood skew for a while here, and it's something we've been talking about on the show on and off again for the last few weeks. Of course, our old friend, the skew index, the much maligned skew index, also down a wee bit since our last show. It had sold off quite a bit, then rallied again. You sold off in air quotes there, listeners, because obviously it's not a tradable product. And then coming into today's show, it's off another about almost 3 points from where it was this time last week. Just a little bit shy of 141. So still frothy, still elevated, but not up at those 150 plus range like it was not too long ago out there. And look at all the measures. I mean, Rock Lobster just talking about it. We talked about it on TWIFO, showing the put skew, at least the part that everyone really cares about, is not quite as big as it has been. Mr. Matt, we were talking on the show not too long ago, some studies coming out, I think it was a Susquehanna, showing that when we see a big decline in the skew index, I believe their metric was somewhere on the order of 10%. That usually correlates to a pretty robust period. I forgot how long it was over the next 2 or 3 or 6 months of a rally in the SPX as a result. Are you a believer in that kind of correlation of the skew index and overall skew in general to what we see out there in the broad markets? Good leading indicator for you? And what do you think about what we're seeing out there right now from a skew perspective, sir?
So I do look at it, but we also have these machine learning tools that go through all our hundreds and thousands of different combinations of variables that we look at. Skew is one. I mean, you could see it when the market sells off and the skew flattens out. That's usually pretty good, and so that is one. But we found it more difficult. Our machine learning likes things like what are the component volatilities versus the weighted volatilities versus the ETF. It likes that a lot. And it even likes, this is going to be a strange one, but I think I've had to think about this a bit. So we do this forecast of implied volatility based on these inputs, kind of our, regression analysis. And when the regression analysis gets to a certain point, and it gets high, that is showing some, that's usually good for the market. When it gets low, and when it can't predict implied volatility, that's when it's bad for the market. So I thought that was when you go and just have a machine test all your stuff, and then that things like that pop out, you scratch your head for a bit, then you say, okay, well, I could get behind that. There's some intuition behind that. If it's difficult to predict. Some our forecast volatility, that probably has something to do with something else is going on that we're not seeing. So I thought that was interesting, and also we do these forward volatility relationships. Andrew's going to like this because he was a master time spread calendar man. But we price calendars based on just a variance type. Straightforward formula, and then we compare that formula to the flat volatility that you would have to set to imply the price of the time spread. So it's a little bit confusing, but one is more of a formulaic, and the other is more of a pricing of a time spread theoretically. And actually, when that relationship gets out of whack, that's positively related to the market. So when that forward vol relationship gets off, that's something that we tend to see when the market's getting a little fidgety, when it's getting under duress. that relationship gets off. So those are the things that I look at more.
Well, speaking of things that you look at, indeed, we all look at right now, it is that time of year, Mr. Matt. So we can delay it no further. The people want to know. We're all champing at the bit because earnings are popping off hot and heavy. We are back in the midst of it, listeners. We are back in the earnings season. Already seen some big announcements coming. I mentioned Snap earlier. We saw the old Tesla earlier in the week there. IBM, Intel, my old stomping grounds. The Rock Lops are talking about them selling off 10%, and the market doesn't really care. That's so crazy because back in the day when I was out there, Intel was kind of like your Tesla and your Apple and combined, and your Google. It was them and Microsoft that led the dance, and everybody else kind of followed. And these days, obviously, the space has evolved in many different ways, but intriguing to see. There are big names popping off this week: J&J, P&G, Netflix, United Airlines. I mentioned Tesla, Abbott Labs, Discover. We had Crocs of the rubber shoe infamy out there, Southwest, a whole bunch of names, Chipotle, Mattel. So, Mr. Matt, it is that time. It seemed appropriate to bring you back on the show to regale us. You guys, of course, over there at Oratz, kind enough to crunch the numbers for our earnings move results, and earnings season reports, all of which you can find over there at theoptionsinsider.com. Listeners, Mr. Matt, as I recall, you were expecting a bit of a banger coming into this season. Break it down for us. What are we seeing so far, sir? And any surprises or things standing out that are worthy of note to you?
Yeah, definitely. I was predicting coming in, just based on the end of the earnings season last time, that we were going to see a little bit more earnings making some impact on the market. Make earnings great again, I think I may have said, but and it looks like that's happening. We just had we break down the earnings season into 6 weeks, and the first week is in the books, and that was actually a positive if you own the straddles for the small number of firms that reported, which I don't remember seeing that ever, and we've been looking at this for about 3 years now. But it looks like week 2 is bad. Usually, what we'll see is week 1 will be bad, week 2 will be bad, week 3 will get close, and then week 4 is usually the best week to own straddles, and week 5, and then it kind of falls off after that. So we put out this earnings season report. You should check that out. We send it out by email to our subscribers every day. And we're adding a new thing, Mark. This is a new announcement right here with the Rock Lobster and
I'm
you.
excited.
We are we have back tested all of the numbers in our earnings report and tested to see if they are predictive or not. And it looks like some of them are pretty good. So we have numbers like what's the straddle. We do a lot of work on taking the residual straddle after earnings are announced away from the existing straddle and really trying to identify what the market is pricing in just for the move, just for that 1 day move. So we have a good earnings move, and we also have the history, and that comparison is important, has come out important in predicting what type of strategies are going to be profitable or not. We tested a short and a long straddle and a short and a long time spread. And so those four tests we've tested out. We've in sample and out of sample, and I've also just hot off the press put those in for the week, so you could see which week was best to buy under our signals, straddles, and when is best to sell. This isn't going to come as a surprise. The best week to buy is week 4. The best to sell is actually week 6. That was a bit of a surprise, but the calendar is turned out the best. I know Dan Passarelli would love to hear that. And I actually was talking to him a little bit about this. He loves to do the calendar, and that's what tested the best. The long calendar, the short calendar. We didn't find as many signals, but they did all right. So that's a lot of fun to see now. These names come out. There's generally about one recommendation per every 100 stocks looked at for each. So 4 times. That's about 5% of the time. So every 20, there's probably a signal. So that's been a lot of fun. I love doing that stuff to see which which stocks are falling into that the category. So we also look at like implied volatility versus implied volatility X earnings. So we will solve for each expiration and get a rational relationship X earnings after taking out a model of a earnings move. And so that comparison turned out to be important. And then also the 90-day historical volatility, X earnings and not X earnings compared to implied. Those are all came out to be important numbers. And also we do a forecast of theoretical value for the straddles. And when those get out of whack, i.e. when they really start jacking up the implied volatility versus that forecast that I talked about, that is one of the better signals for identifying trading opportunities out there. So yeah, it's a mouthful, and we're just starting off this earnings season. We're just starting to get these signals out to our subscribers, and I've been checking them out. So it's been a lot of fun, Mark.
It has been a lot of fun. And I was like you. I saw those first week's numbers come in, and I was, oh, green. I was super excited. I think it was 106%, something along those lines. And I was like, okay, here we go. The race is on. The crazy banger of a season that we were expecting is in. And then, of course, the week 2 numbers are coming in. It's 45% right now. So a little bit more apocalyptic in the other direction. Obviously, the week is still young. We haven't crunched all of the numbers yet out there, but still an interesting thing. By the way, Matt, before we roll off the reports, really quickly, do me a favor. And for all of our listeners out there, do them a favor as well, because I've been this week on our show, maybe last week, the Rock Lobster was giving me a hard time because one of your earnings move results reports, I think it was for Walgreens Boots Alliance, it showed the move results for the announcement, the actual move versus the expected move was somewhere like 0.5%. And sure enough, later on in the session, Walgreens Boots Alliance made a huge move. Andrew was like, I don't get this report. So break it down for us when you're talking specifically about the earnings move results. What is the window that you're using to measure that movement, sir?
Yeah, I'll have to look at that one specifically. But when we look at the past earnings results, that's 12 quarters. So we'll just take an average of the absolute move on percentage terms and whatever that average is, and then convert it to a dollars move because people like to look at it in that respect. And then that's the comparison. You just, you kind of just compare the straddle that's being implied in the market, and it's usually really close. I mean, that's what they're definitely looking at that.
And it's usually right on the open, right after the announcement, pretty much. For the actual, I'm talking about the earnings move results.
Oh, the actual.
Yes, the actual.
Yeah. So the actual move, we actually wait till 14 minutes before the close. That's just when we have historical data. So we wait until if you were going to test our numbers out, we take a snapshot in the middle of the day. But when we put in the results, we all of our history and our back testing is based on a 14 minutes before the close snapshot. And the reason what we do that is that's as close to the close as we could get. But as Andrew and I know well, some weird things happen to the bid-ask spreads and market levels as you get close to the close. So we try to get as close to the close without getting too close when the markets start getting a little bit less liquid, Mark.
There you go, Mr. Rock Lobster. If you stop giving me a hard time, you can pass it over to your neighbor in the compound to the southwest there as we keep on rolling. We could talk earnings for the rest of the show. I know you folks love it. You guys can find it all for yourselves. TheOptionsInsider.com. Click on the Options News and Articles tab, and then you can see the earnings move results, and earnings season. And the first week of the earnings season was shaping up pretty good. So far, week 2, not so much, but we shall see. You know what else we're going to see? What the heck's going on in the world of the actual tradable volatility products that you folks all love? Let's head on out to the futures first. Obviously, things are moving and shaking quite a bit as we've been gassing on here about earnings vol. Also, the OCC future rolling off the board since our last show. So we're looking at the front part of that curve being all Nove and Dees now. The no future coming into showtime, it was down a little bit, down about 0.5 point, but not a lot. The Dees future was actually unched from where it was this time last week. I'm sure if we ran this again right now, it might be a little bit different, but that's the tail of the tape when you're looking out there at the front of the futures curve where all that action happens. Mr. Rock Lobster, anything catching your eye from a VIX futures perspective this week, sir?
Yeah, and I mean, when you look at the future premium, we haven't seen this amount since January, maybe in the front month. I mean, I know you got some other VIX watchers on here, but $4 over cash is pretty substantial. Actually, it's dropped a little. It's only 360. It was $4 a couple days ago before VXX took another hit. So again, my thought is this premium, this bit of the curve is being pulled up because they're waiting for earnings. There's just not like kind of concentrated around that date. Then after earnings, I think we're going to see maybe $1 come out of the futures from here by Friday. So we'll see how significant the drop in vol is. Like Matt pointed out, like having the curve relax substantially, there's a little bit less of a bid for vol. And again, if we have decent earnings, it's going to be hard. Like the liquidity provider, they're not in the business of keeping vol up there if they don't have to, So if it brings some sellers in, we should see that come in. So I think there's a very rich curve. VXX is still a good opportunity. As crazy as it sounds, under the current decay regime, VXX could be $18 by November expiration. So however you want to think of that, that's without VIX moving. VIX goes to like a 13 handle. Like it could be it could be totally demolished. And granted, it's probably not going to get that low. I would be, we did break 15. I think we could break 14 by the end of next week. And that's kind of how I'm planning. But I think the curve offers a lot of leverage for interesting trades. So anyway, that's what I'm doing. And after the show, I'll be able to add a little more. And we'll see what happens. Very exciting stuff.
Very exciting stuff indeed. Let's see what's exciting out there in the land of the vol options. First, let's go out to Spike's land. We had over 10,000 contracts open out there. A lot of that was October, so roughly 8,000 or so of that rolling off the board. The big positions out there in Spike's options coming into the show today. Looks like it was pretty much your NOV four-way, the kind of standard put vertical and call vertical out there. The 30-32 half vertical against the 16-18 put vertical out there. So intriguing stuff in Spike's land. Looking forward to seeing how those contracts are replaced with something out there in NOV, maybe DECE. If past is prologue, it'll tend to be something usually weighted towards the upside, but we shall see. Looking on out to VIX options, actually doing a little bit of paper today. 303,000 contracts on the tape as of a few minutes ago, so a pretty decent paper. The ADV this week, 446. If that sounds familiar, it's because it's literally exactly the same as it was this time last week. It has not changed an iota, which is kind of weird, and I don't think we've ever seen that in the length of time you've been doing this show. So no change from an ADV perspective, which is a little bit bizarre in and of itself. Let's look at the top positions. What are the size open positions out there in VIX right now? Let's start with number 10. Obviously, these numbers a little bit lower because, again, we just saw a lot of roll off the board. So the number 10 only cost you 102,000 contracts to break into the top 10 in VIX right now. If you know anything about VIX, that's pretty low. That gets you to the Jan 17 puts, our first and only Jan in the top 10 today. By the way, if you're wondering, 60-40 puts to calls. So still biased towards the puts, but swinging a little bit more egalitarian this week. Number 9, we have a little bit of a call strip going on here. Number 9, 113,000 of the Feb 65s, our first and only Feb. So number 10 and 9 are Jan and Feb, and that's it for the rest of the top 10. Number 8, 117,000 of the DECE 30s. Number 7, 121,000 of the NOV 20s, and that's most of our calls right there. And number 6, $150 of the D17 puts. Number 5, our fourth and final call in the top 10, 151,000 of the NOV 60 calls. Number 4, $167 of the NOV 16 puts. Number 3, $167 as well, so kind of a tie for third effectively with the NOV 18 puts. Number 2, 204,000 of the NOV 17 puts. And number 1 out there in VIX options right now, the size position, it is the NOV 15 puts, 298,000 open on that strike. Total of about 6.4 million contracts open out there, about 2.5 million on the puts and about 3.9 million on the calls. Getting into the action, what we're seeing out there this week, like I said, today, a decently active day, actually, 303,000 contracts on the tape. The most active contract today, strangely enough, you can tell the Rock Lobster has been busy because the Nove 70s are trading for size out there today. 22,400 on the tape right now. How many of those is he buying? I'm going to guess all 22,400. But we'll find out in a few minutes. If that's not far enough out in time, but it's also maybe a little bit too optimistic for you, we got number 2, the Nove 40s. 18,200 of those on the tape today. So some intriguing strikes dominating our top 5 today. Number 3, 17,000 of the Nove 15 puts. That's more along the lines of what you expect. Number 4, 16,000 of the Nove 16 puts. And rounding out a very weird top 5 today, 15,700 of the Dees 95s. What is in the water today that people are slinging the Jan 40s, the Nove 70s, and the Dees 95s? So we'll have to find out when we talk to the Rock Lobster in a little bit. Yesterday, Thursday, 336,000 contracts on the tape. Number 1 out there yesterday, about 23,000 of the Nove 17 puts. Mostly more normal expected paper yesterday. About 20,000 for number 2 of the Nove 14 half puts. Number 3, 16,000 of the Nove 16 puts. Number 4, we have 15,000 of the Jan, back out to Jan 16 puts. And rounding out the top 5 yesterday, 14,600 of the Nove 19 puts. Wednesday, one of the busier days of the week, but not quite, actually, weirdly enough, Wednesday and Monday exactly tied, both days doing 532,000. A weird week for ties in volatility volume this week. Wednesday, 532,000. The most active contract on Wednesday, 76, almost 77,000 of the Nove 15 puts. Once again, that was the big dog. Number 2, 44,000 of the Nove 16 puts. Number 3, 22,000 of the Nove 50s, followed by 21,000 of the Nove 40s. So looks like perhaps a bit of a vertical. Also 21,000 as well of the Nove 20s. So that would be an interesting, funky vertical, maybe with a kicker, but it's not a fly. There's no ratio to it. It's all straight up. So I'll have to go look and dig and see if we can see what the folks were up to there with the Nove 20s, 40s, and 50s on Wednesday. Tuesday, the most active day of the week, 805,000 contracts on the tape. The most active contract, the OX 16 puts, obviously going the way of the dodo. 80,000 of those going up on Tuesday, followed by 70,000 of the Jan 50s. Back to Jan, this time up to the 50s. Number 3, 69,000 of the Jan 17 puts. Number 4, 52,000 of the Nove 15 puts. And rounding out the top 5 on Tuesday, 37,000 of the October 17 puts. Monday, tied for Wednesday, the exact same amount of volume, 532,000 contracts. The big trade on Monday, of that 532, 100,000 almost exactly of the Nove 20 calls going up out there on Monday. Interesting stuff. Followed by number 2, 96,000 of the October 17 puts. So just in those 2 trades, you're talking almost 200,000 contracts. Number 3, 21,000 of the March. The first March we've seen in our top 5 in a little bit. March 20 calls. Number 4, 18,000 of the October 16 puts. And rounding out the top 5 on a decently active Monday, about 16,000 of the October 18 calls. Mr. Rock Lobster, will go to you. You know what I'm going to ask you first, sir. How many of these Nove 70s and Dees 95s did you buy?
Well, 6 cents is looks like a pretty lovely price for all this stuff. So I would like to say, I would like to make you feel good that you were correct in your guess that I was buying all this crazy upside in VIX. However, I have to say that today is not my VIX call buying day.
It's only 15,700 of the Dees 95. That's like a rounding error for you.
I know. You know who I haven't seen in all this volume? 50 Cent.
Your boy 50 Cent. He has not been back. Yes.
So, I mean, and I have to admit, and I know that I believe I heard rumors that the guy's a big credit book or something like that. And, but him not sniffing around also, and you hedge when you can, not when you have to. Clearly he showed his chops in that department for sure. But you're not seeing that kind of, you're not seeing that big volume. So clearly now this is, pretty good volume on those crazy calls. And I think that some of the other shows on the network we've talked about, who is new to the marketplace. You have all these meme kids, you have this tremendous, I'm not bashing them, but it just, if they just traded the last 2 years, they think like a 90 VIX is a normal thing. Like, okay, anytime that 90 VIX is going to come back. And it does. It usually like once a decade. If we ever have a sovereign debt crisis or something really disastrous like that, which, who knows? They've been predicting that for the last 10 years. I could see that driving a vol up, or, governments lose their mind over COVID again and really do something stupid. That all these things could happen. However, you're not really seeing that size buying of that type of option, I would say. So somebody is buying some, probably as a hedge against other stuff, selling other calls or selling the futures, or maybe even trying to, sell the curve in VIX right now. You don't know what kind of future spreads they have on, something like that. I know buying some calls is a viable strategy when you're, when you're a VIX future spreader, right? Because you're trying to, what do the Thompson boys call it? The mullet, how long in the back, short in the front, kind of ratio it and buy some junk calls just in case. So I see that kind of action, but I'm not seeing like that heavy, like we're going to 40, 50 VIX again kind of action. But that would just be an observation.
Speaking of observations, I'm trying to observe now what was going on with those verticals there on Wednesday. And it seems like it was a Nove Dees 40 roll that went up about 20,000 times, close to it. And it looks like maybe they sold the Nove 50s after that for 20 cents. Looks like that all kind of went up piecemeal. It wasn't like I initially assumed, some sort of crazy vertical going up. It looks like the Noves were probably rolled to Dees. Again, there's so much OI on all these strikes, it's sometimes hard to tell exactly what is afoot on these things. But intriguing stuff nonetheless. Let's see if we can find some intriguing action out there in the land of VXX out there this week. VXX ADV kind of fallen off of a cliff over the course of this past week, losing about 43,000 contracts at about exactly 250,000 out there coming into today's show. So that's a big decline out there in VXX after it was threatening to break 300K from an ADV perspective, which is getting into VIX territory out there, but then it kind of giving it all back up this week. Let's see what's open out there in VXX land this week. If you are intrigued, it is still 70-30 puts to calls out there. So puts still leading the dance on the top 10 in VXX. The bottom of our top 10 is where we find most of our calls. Number 10, about 13,000 of the Dees 95s. Gotta love those. Number 9, 13,500 of the Nove 30s. That's 2 of our 3 calls right there. Number 8, 14,600 of the Nove 20 puts. Number 7, 14,700 of the Dees 30 puts. Number 6, 15,000 of one of our few remaining VXX1 positions out here. The Jan 3 puts. These are the Jan 2023 3 puts. So those will be with us for a while. Number 5, 15,500 of the Nove 23 puts. Number 4, 15,600 of the Nove 21 puts. Number 3, 15,800 of our final call in the top 10, the Dees 30s. Numero dos here, 18,000 of the, once again, VXX1 Jan 2022 12 puts. And the size position out there in the number 1 spot in VXX this week, 23,000 of the Nove 18 puts. Let's look at what's lighting it up out there today. Today, a decently active day, about 166,000 contracts on the tape. The most active contract out there today, as you might expect, all the October going away today. The OCC 22 calls at 8,000. By the way, yeah, VXX coming into showtime is at about 21.75. That puts it down about 0.75 of a point from last week. And obviously, those 22 calls are in play right now. At least they were. 8,000 of those going up today. About 7,200 of the October 21 half puts. Then we've got about 5,000 each of the 20 half puts, 22 half calls, and 22 puts out there. Mr. Rock Lobster, anything lighting up your tape or the tapes of your crazies in VXX, sir? The big red button is the mute button, by the way.
Oh, my God. Twice. Oh, geez, Louise. Like, you know what? AMBERSON comes on and I can't even work the mute button anymore. What I would note in VXX, not as much as per strike action, but VXX implied volatility hit a 1-year low and a COVID era low this week. I think it was yesterday or the day before. So again, another signal that, wow, vol in the vol products hit a new low this week. So again, trying to get are we getting past the COVID, and all that kind of stuff? Very strong, right? So I would say options in VXX, and there's a little bit of a pop in VXX because of the taper talk from Powell today, saying, hey, we're going forward with the taper, and we're going to be done with it by middle of 2022. So again, pretty strong words. The NASDAQ didn't take it as well. And we'll see if they really, if the sell-off really holds there. But what I'd say is, that's definitely a thing to notice is, vol is definitely lowest. That's another reason why I was so interested in leveraging kind of like the put in VXX and sort of the strangly action in SPY, because those relative values were very good. You had very low vol in VXX. We have 1 year low vols in SPY, and I think the market's still moving around a little bit. So it made an interesting recipe. Let's just a pot of options to stir. So that was my big observation this week. 1 year lows is always significant.
Significant indeed. Mr. Matt, I know you have a lot of factors over there in your models. I know you watch a lot of different things in the volatility space. I'm curious for you, as you're crunching all your data over there, what role, if any, do these ever eroding products like your VXXs and your UVXYs, what role do they play in your analysis? Do you track them? Do you incorporate them into your models? Or are they more kind of just interesting data points and that's about it?
Oh, no. I mean, we've done some great back tests on it. As you know, I like to own these really long-term SPY puts, way out of the money puts. So I'm always looking for something, to help me out on the theta or help me out in some other way. So, we've back tested a lot of UVXY put spreads and short call spreads, and they look good. So I'm often in those. Those VIX puts, I also own some of those. Those VIX calls, way out of the money ones. We've tested just some ratios, and so that I think that's appealing to a lot of people. So I like to put on those ratios, sell one, buy 3 or 4 of the 100. I think I even have 130s in Jan or something, and then you buy in the call when it decays, and then you're left with these really small, way out of money calls that are as market makers we used to love to have anything like that, like way out of the money puts, way out of the money VIX calls. So that's how I tend to look at these instruments. I think they could really help. When you're I want to have puts, but I want to pay for them, and I want to use these vol products to help me do that.
The 130s. I wasn't expecting you to go there, sir. You always take me in an interesting direction when you come on the show, sir. I like it. Let's keep on rolling here into UVXY. Coming into showtime was at about a 1690. It puts it down about exactly a point from where it was this time last week. UVXY, I was saying this on the option block earlier this week. This thing just reverse split to 40 not too long ago. And that was pretty much started having the rumblings of that when it got close to 10. And here we are with a 16 handle again here. Listen, it just, it is insane how much the erosion has really kicked into high gear out here in UVXY. Not even this year, just in the past few months out here. Coming into today's show, seems a decent amount of action, even though ADV is down here as well. Not as much as VXX, but still taking a bit of a hit. Let's see, 181,000 down about 17,000 from last week. Today we had about 168,000 on the tape. Let's do a quick top 5 here because we're kind of coming up against it here. Number 5, we got the UVXY 1. It's a pre-split adjusted Jan 1 puts 8,800 of those. Number 4, 8,900 of the OC 16 halves. These are expiring next week on the 29th. Number 3, about 9,000 of the October 20s expiring today. Number 4, 11,000 of the October 18 calls also expiring today. Number 1, close to Matt's favorite strike, not quite the 130s, the Jan 75s. 16,000 of those bad boys out there for number 1. Today's most active trades, pretty much all October expiring today. It's the 17s, 18s, and 17 puts with about 10,000, 8,000, and 8,000 respectively there. as we keep on rolling. Let's see. We already did some of the earnings. You got to check out the earnings move results, and earnings season reports. We do have some big names on the radar coming up this week. We got Facebook after the bell on the 25th. We already had Intel and some of those fun names. But yeah, Facebook on the 25th after the bell, they're at 341 as of this report. They're pricing in 1765. In the past, they've moved 1729, so a little bit extra juice. It's hard to gauge whether that's the right play these days because we are still in the flux of the season. GE on the 26th before the bell at 106 even. They're pricing in 481. In the past, they moved 566, so a lot less juice out there in GE. Eli Lilly on the 26th before the bell, 243 3/4, where they were trading $9. They were pricing in the past. They moved 685, so a lot of extra juice out there in Eli Lilly. The Googs. Let's go to the alphabet. 28.35 is where they were trading. They're pricing in 108.5. In the past, they moved 125.40. So a lot less juice in Google. Again, the past is prologue. Hard to argue with that. Let's go out to Ford. Everyone's favorite meme, not meme. Is it a meme name? I got a feeling we'll be talking about Ford maybe a little bit later in the oddities again, listeners. October 27th is Ford. You can argue that maybe they already had their earnings move. The thing has popped over the last week. I was trading $16 as of this report. They're pricing in 76 cents. In the past, they moved 66 cents. So a little bit extra juice in Ford, which, again, given this past week, kind of hard to fault Apple. The name a lot of people are waiting for on the 28th. 149.25. They're pricing in 466. In the past, they moved 584. So less juice on the Apple Rose. Let's go to Amazon really quickly as well. 28th after the bell. So 28th, a big day next week, listeners. 34.15. That level just sounds absurd when you're talking about valuation, but c'est la vie. 128.79 is what they were pricing in. In the past, they moved 148.5. So a lot less juice in Amazon as well. As we keep on rolling, listeners, it is that time. I'm looking at some people's tweet responses to your Zone of the Monk, Mr. Rock Lobster, as we keep on rolling into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Really quickly, there's this guy, Charlie Zelenov is listening. You obviously heard the Zone of the Monk. He says, Zone of the Monk? What the F? Where do you people come up with these things? I'll give you the Zone of the Monk, and he includes it looks like a link to a GIF of one of those Shaolin monks doing some crazy moves out there. So he appreciates Zone of the Monk, which I can appreciate, Mr. Rock Lobster, as the person who coined that phrase, sir. What say you?
I have to say, I give you full credit for the catchy phrases for my zone. So for the listener that is wondering, VIX, basically, I trade volatility by quartile. Not earth-shattering, but it's good to know that Zone of the Monk is 9 to 12. It's the lowest VIX zone. And basically, I trade it in quartiles, and it's a trading system I have. So anyway, that's what it is. Zone 1 is Zone of the Monk. And Zone 4 is Danger Zone. What we need is a couple of the tweener zones because they're not as exciting.
Yeah, they're not as exciting in there. We've been hanging out with them for a while. I mean,
I think maybe we just
Danger Zone, it just writes itself. I mean, you get the logins going, everyone's pumped. You get the YouTube copyright bans. It's all a good time for everybody out there. Zone of the Monk, if you're wondering, Charlie and everybody else, it's because no one's getting any action. There's no action. Nothing's happening in the Zone of the Monk. So that's why it is the Zone of the Monk, listeners. No action for anyone involved there. So Charlie and everyone else, while you're scratching your head, Zone of the Monk, that's where it comes from. All right, we're hanging out. We're not quite in it, but we're threatening the Zone of the Monk. Coming into the end of the show, VIX is pretty much at exactly a 15.5. And let's see, where is Spikes? Spikes is at 1560, actually 1573 right now. So let's see. Last week on the show, it was myself, the Rock Lobster, and Tomas from Mayax. Let's see. Mr. Rock Lobster, you were at a 15.15, so not looking too bad. Not looking bad at all on VIX. You're about 0.35 away. On Spikes, you're about 0.6 away. Still not bad. Not within our 10th of a point frame of victory, but you may be taking home the prize today. I was at a 16.35, so I'm looking pretty much. I'm a little bit closer on Spikes. I'm about 0.6 away on Spikes. Not so good on VIX. And Tom was at a 17.05, so he's not winning any of these. So it looks like I'll have to doff my cap to you, Mr. Rock Lobster. You'll be taking the prize. Not within our margin of victory today, but pretty darn close. I'll give you that. Let's look at some of our listeners really quickly, see where they were lining up. You guys are all over the place. 19.5, 14.5, 16, Super Vix, Athena, JVC, Munster, Nichols, 14.85. Yeah, not bad, Nichols. You're not bad. Let's see. We got any 15? Munster's at a 15 even. That's not bad either, within half a point. But if you want to win prizes, you got to be closer than that, Munster. Athena's 14.5, no joy there. You got a lot of 14 handles this week. Nichols, 14.85. Mensa, 12.96. Man, you were feeling the vol going the way of the dodo. Not so much this week, Mensa. Frank was at 16.5. Options Queen, 16.75. Not bad, Options Queen. You're about a point away on spikes, so you're within the range, but not quite there. My boy Luigi, 17.85. So he was feeling more upside as well. So it's like we don't really have any listener winner chicken dinners. The best we got is about a 15 handle. He's pretty close to you, Mr. Rock Lobster. So I will cede the victory to you this week, sir, and I'll give a token doff of the cap to Munster as well, even though no prize really for either of you out there this week. But Mr. Rock Lobster, I will allow you to choose. Do you want to go first, or do you want to go last and make someone else go first?
The hardest thing was that we opened 15-15 today.
Yeah, you were flirting with it. That's what makes this segment so painful, because you could see it. It's in your grasp, and then it's ripped brutally away.
It is. And of course, the nature of vol, it moves. I will tell you what. So in deference to Matt, because when he first came to the pit, he might have leaned on me when I was the DPM. I'm going to lean on what he's doing today. I'm going to go last.
All right. We can always have an easier crystal ball, a baby's version, and then just say, oh, this has to touch whatever you guess. And then you win. And then we could be all over the place, be 5 handles wide, and everybody could win. And it could be like a participation trophy for everybody. But nay.
There's no participation.
No participation trophies. Even if it's heartbreaking, if you see your number at the start of the show. But by the end of the show, it is, and that has happened to me many times. We've all been there. All right, Mr. Matt, you have been given the dubious honor of going first, sir. What do you feel for this time next week?
I'm 14.85.
Wow, you had that ready to go. You were cranking. You were running the numbers as we were talking, weren't you?
I'm ready.
You were crunching those numbers. 14.85 for the Oracle of New Hampshire. So he's feeling not quite zone of the monk, but he's getting closer. So I shall go next now. Let's see here. 14.85 for Mr. Matt. We are at about 15.80 now in spikes. Right around 15.5 in VIX cash. Let's see here. The erosion, it's hard to argue with that. Is what we have been seeing of late. I don't know if I see as much juice coming out as Mr. Oracle. Tell you what, I don't normally like hanging out, but I kind of feel a bit of a hangout week. So this time next week, going to be pretty much exactly where we are in spikes right now, right around a 15.75 out there. So I'm going to be at that level. So kind of an unched net week for us. Mr. Rock Lobster, what say you, sir, as you go last?
I do like Matt's. I think the earnings are going to be pretty good, but we're going to have a little stormy week. I think they are going to crush balls. So he said 14.50.
No, he said 14.85. He said 14.85.
He said 14.85. I'm going to go 14.25. So I'm not gonna scum them by a penny. I'm actually gonna make a real bid down there.
All right, planting your flag there at 14.25. So there's our market, listeners. 14.25 on the downside. Mr. Matt in the middle at 14.85, and me coming in at the upside this week, 15.75. Got some guesses coming in fast and furious in our chat. Oh, 17.76. So more upside there. Options Queen at a 16.5. Frank 15. Frank feeling 15.25. So he's feeling a little bit lower as well. So you guys are kind of all over the place, which is kind of like us, which is fun. If you want to play along, listeners, you know where to find us at Options on all the social medias, or hit us up at the questions at theoptionsinsider.com with your guess. If you hit it out of the park, maybe you get some winner chicken dinner prizes for you. Man, an hour flies when you're talking volatility. Unfortunately, that music, listeners, means we've come to the end of our fine program here. But fret not. If you need a little more in your ear holes and you're hanging out in the old secret club, we'll be back in a little less than an hour now to break down the weird, wild, and wonderful world of unusual options activity on Options Oddities. But before we go, Mr. Matt, you did an able job, as always, holding down the MIAX hot seat this week. If folks are intrigued, they want to hit you up about back tests or earnings vol or anything under the sun, sir, where should they go? What should they do?
Well, it's great to be on with you. And of course, Andrew, always learned something. Today was about the timing for the UVXY and VXX. So thanks to Andrew on that. Yeah, you should check out orats.com and sign up for the earnings reports that we put out daily, because they'll have the signals in there. We'll be able to watch those going forward. That's going to be a lot of fun. And we have a killer scanner coming out as well. So it's we have a lot going on, Mark. So come on over to orats.com.
And you said that cool earnings study. Is that available yet too, or is that still under lock?
Yeah, that's it. Yeah, it's in the blog. So go check out the ORATS blog and check out the earnings study that we put up there.
Yeah, it's interesting stuff, listeners. If you like all this earnings we're talking about here, Matt's and his team crunched some numbers in some interesting ways to see what all this data really means for your trading around earnings. Check out his earnings study over there. It's all to be found at orats.com, ORATS.com. Give him a follow on the old Twitter machine as well. He's got a fun handle at Option Rats, all one word over there. And he's not a rat. You may think so. He's too busy killing the crickets, though. He is the rockingest of lobsters. Mr. Rock Lobster, sir, when you're not busy infecting the rest of the world with corona thanks to your delicious Maine lobsters. What are you up to over there, and what can our people check out?
Actually, you know what? I had to beat back the PETA people from cricket killing. They heard that on the show, and they've been. Oh,
they came for you. Were they picketing the compound again?
They've been picketing the compound. So it's been a rough week over here at the Stormy compound. What am I watching this week? Again, for next week, just watching VIX go lower. If people want to learn stuff, go to optionpit.com. Memberships. I run the Vol Trade Club, although we don't have good swag yet. I want a nice little hat to go with it. Capital gains. Look at Brazil for all you who are interested in a little political intrigue, and the EWZ is getting smashed. I think there's some opportunity there. And let's see, Trading Legion, the Legion of Trading. If you want to, we're going to be working on just index strategy for the next few months. So if you want to join, learn how to use flies and calendars and use volatility to make those trades work as good as they can, come on over and sign up. So 888-TRADE-01. Ask for Ted, although not today because he is out. But come on back Monday and give him a call. Like I said, if you listen to this show and you call Ted, he will send you a free copy of either VIX Made Easy or VXX Made Easy, but you must call and ask him. So $250 value each of those. They're great learning products. So again, 888-TRADE-01. You got to call Ted to get it.
There you go.
Anyway, that's a freebie. It's a real freebie.
Yeah.
So you get something for nothing here at here from Volvius.
Remember, the secret code phrase was, you enjoy hearing Andrew blather on. That's what it was. If you say that to Ted, then that's the only way you get the freebie. If you don't say that, no freebie for you as you call Ted over there in the land of the pit. And you folks know where to go to learn more about all things spikes. MyAxOptions.com/spikes. They have great historical data there, the releases and all the new things they have cooking up their sleeves over there, as well as, of course, a link to a fun show called Volatility Views. What more could you ask for? We'll see you back here in a little bit for Options Oddities, and then back again next week for another episode of Volatility Views. Have a good weekend, everybody.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.